What's up, traders? Welcome back to the channel. Today we're diving into Bitcoin's wild ride, technicals and some fundies, and how the S&P 500's latest moves might signal what's coming next. We've got a lot to unpack after yesterday's chaos, so grab your coffee, hit the like button, and let's get into it. First up, Bitcoin. Bitcoin setting at $96,600 as I record this, down 1.65% from yesterday after peaking near $99,500. We are still in the same choppy range we've been in for 19 days. On the daily chart, so we got daily support sitting at $95,607. That's the lowest daily close that we've gotten in this 19-day range. That is where current support is sitting. And if things get really ugly, we got the yearly opening range setting at $93,347. And we were just there Tuesday of this week. So it's not good if we start closing dailies under that last lowest daily close. Current resistance being the midpoint of January's range at $99,193. The midpoint is just the 50% retracement of that candle's entire range from low to high. That has been the controlling factor or the resistance since we've been in this range. Since we broke down all the way back here in February the 4th, we have not been able to close a daily back above that. We looked good yesterday, going into yesterday. If you remember, I had a target of $98,900. That was just this candle's high. We did ultimately hit my target, but then we traded up into that resistance, and that's where we needed to get above and stay above for the bulls to stay in control. The bulls have really not been in control. Obviously, the bears have been in control for a long time, but we did get in control when we closed Thursday above the 20 and above the 50 on the RSI. It was just for one day. So in a sense, we made a bull trap because here we are, back down under the 20 and under the 50. This puts the bears firmly back in control of price on the near term. If we go down into the 4-hour time frame, you can kind of see how this is playing out right now. We did get a big breakdown move yesterday after hitting that resistance. This resistance was an area that we knew was there, so we were definitely watching it when price traded up into it. And although I had a bullish bias going into yesterday's price action, obviously I'm still taking that trade, which you can see right here. So I was short right there. About that time when I got short, I didn't want to take the short, but I seen a big volume spike on the volume profile, the session volume profile. We'll check that out here in a minute. Yesterday, we essentially, when we traded up into the resistance, if we go down into let's get rid of the moving averages. They've done their job. Let's go down into the smaller time frame chart, and you can see this spike right here in volume. So you can see right here, if I hit this bar, you can see how that big volume spike came in right as this thing shot up, and then here goes starting to build. So you can see how this volume's starting to build right here. So going into the news, essentially when the volume spike came in there, that's basically what triggered me into looking for the short trade. And then basically at 10 o'clock, that's when we got the news. Michigan consumer sentiment crashed to a 64.7, a 15-month low, with inflation expectations jumping to 4.3%. Obviously, that spooked traders, especially with the Fed in no rush to cut rates. You also had United Health, 7% plunge on a DOJ probe that didn't help, and tariff jitters are real as Trump's reciprocal levies loom. While this is all well and good, the big one today, we had a Bybit hack overnight. North Korean hackers yanked 1.4 billion in Ethereum from the exchange. And then there is this HKU5V, COVID-2 virus noise out of China. No human cases yet, but markets don't care. Yesterday had a $927 billion stock wipeout. Yeah, there is kind of a lot of stuff out there that is driving a lot of this fear. We have that level as being the main resistance, But obviously $100,000 is going to be a psychological ceiling for a lot of traders. So what I wanted to see on the bullish front, once we did get the bullish signal, I wanted to see bullish continuation in a way that suggested we were going to see a spike in volatility. And I wanted to see that spike in volatility happen to the upside. The volatility metric that I am speaking of is this indicator right here. As you can clearly see, this is on the floor, and it has been on the floor for many, many days. Now, this indicator is not a directionally biased indicator. It just lets you know when the volatility is low, so that way you can expect a volatility breakout. Generally, that would encompass a multi-day with one direction. So if we get the volatility breakout to the upside, or that could spawn 3 to 5 days of just straight upside. And that's what looked like it was going to happen. Yesterday, when I published my weekly newsletter, I was extremely bullish because the overall macro fundamental flow appears to be on my side. But yesterday, we got all of that news. Even after all the bad news we had yesterday, you had last night's Bybit hack. So, I mean, there are a lot of things out there that seem to be causing these markets duress. And the fact that the risk markets were at all-time highs yesterday, then broke down, and Bitcoin's at the low edge of the range, that also has me a little bit concerned. So, of course, I'm going to take short scalps when we get at significant resistant periods, but I'm also going to be looking to be a buyer, as just because we had a little bit of chaos yesterday, the overall narrative still supports bullish risk. Let's go look at the S&P 500. All right, so this week we had a $75 expected move. Obviously, yesterday with all the volatility, that came crashing down below that area and into well under your bottom edge of the expected move and back under the high month close. That's significant. Next week's expected move is a little bit bigger at $113. So the expected range high for next week, 61.26. You've also got high day close resistance coming in at 61.18 spot 72. And then you have high week resistance at 61.01. So you have a lot of resistance up here now. If prices were to come back to this level, it would probably be a short signal with the breakdown that we've just had. Now, last week I was saying that we were probably going to break out and make fresh all-time highs. We did do that, but we did not get bullish continuation. So as you can see, if you go back in time, all the way back in December of last year, we're not very far from the all-time highs we made back then. So prices have been trading essentially in a sideways range with volatile moves lower and volatile moves higher since then. 6,100 is the all-time high in December, and we were trading at that price just yesterday before we broke down. So obviously I'm not saying that we're going to see a market collapse or a market crash or anything like that. But with this high and this kind of a reversal move here, obviously that China news is going to be more influential on risk markets, more so than the Michigan consumer sentiment. So a lot of sell side activity yesterday. $5,900 is going to be the weekly expected range low. It's going to be back down at the yearly opening range, a huge area of potential support. So if we get down here, as long as we don't blast through it like this, then I would probably be a buyer. Going over and looking at the dollar really fast, you can see that the dollar, even though we had a very volatile move in risk markets and in Bitcoin, you can see the dollar did not have a volatility spike to the upside. You did have a volatility spike to the upside on the VIX, but that's natural, right? That's normal. That's what happens when the S&P comes crashing down. But if this was a real serious problem that we could expect to last for a lot of time, I would have wanted to see this dollar spike up and throw in a bullish engulfing or something like that. We didn't get that. We got a very small move on the dollar. The dollar is actually looking like, you're into full-on bearish mode here. You're under the 40 on the RSI. That indicates not only are you bearish, but that you have bearish momentum, which is good for us as we are short the dollar. If we go look at bonds, the 30-year had a nice move lower yesterday. This is a 30-year yield. The 30-year bond actually had a nice bullish move. This is good. This is what we want to see. We want to see bonds start to be bullish, as that would support a bearish dollar. And in my opinion, a bearish dollar does support a bullish risk market and potentially bullish Bitcoin. Here's the problem though. When you have the yields up at these levels, 4.8% and higher, a lot of people will rotate out of risky assets into the safer bonds. So you could see a little bit of capital rotation happening. People getting out of the more risky assets as they've been in a 2-year bull market, starting to put money into safer assets such as bond, seeing how that we are kind of set up for a macro bearish dollar. So that, in my opinion, would be about the best bullish scenario that I could give you for Bitcoin, that you do potentially have bearish dollar. Our bearish dollar positions currently are in the Euro USD. We are long from down here on the Euro USD. We have a short on USD JPY from 154.68, and that position is still on as well. We did take a day trade on USD Swissy the other day, and you can see right here that was a beautiful short scalp. That trade has been closed because I had too much dollar exposure. I was just looking to capitalize on this move lower, so it was a bigger position. So I went ahead and closed that position out. I don't want to have all my Forex trades being short dollar. One Forex position that we're going to watch that doesn't have any dollar exposure in it will be this. No, this is wrong. It's going to be Euro CAD. I posted this the other day in the Discord, and basically what we're looking at here is we want to trade this to the upside if we get the breakout. So as you can see here, let me get all the moving averages on. Let me turn off that near term. That near term was just a 10 simple. I want to keep my EMAs up real fast. You can see how you have an like a whole bunch of moving averages in here like this. Now obviously if I was going to have short dollar euro sentiment, then I would be wanting to potentially look at this as a short trade. But like I said, I already have enough short dollar exposure. So what we're looking for is a bullish breakout here. So if we get a bullish breakout, we are then going to look for pullback support. So higher low support. We don't have that yet. Our current near term resistance level is going to be 1.48831. So what I would love to see is I would love to see a rip above and then a potential pullback into this level here. And then I want to see support hold for that bigger run higher. And that could get us some long euro exposure. So that's the only cross pair that I'm looking at right now for potential trade setup, Euro CAD. On the Magnificent Seven side, there are two potential trades that you can watch. Let's go back to the other chart. All right, so here we have Apple. As you can see, on Friday, we traded back up to the yearly opening range and we have rejected. So as of moving on next week, I will be watching 245.83 to act as resistance. Now this could be Tuesday or even Wednesday into next week. I don't know. Basically what I want to see is I want to see daily closes under. We already got that on Friday, but I want to see that this area acts as resistance. So I will not be taking any shorts on Apple while prices are above 245.83. So I don't want to see price able to trade above that. When that happens, or if that happens, then I could potentially look to jump on any downside expansion that we may get on Apple. Here on Nvidia, the last time we did a members only live stream, we had this candle here, just this one daily bullish candle above the yearly opening. I was telling people that it was potentially coming into this range here. You can see it's an obvious channel heading in the lower direction. But I said as long as you're above the yearly opening range, you have to be careful because you could see bullish breakouts to the upside. I said if this area acts as resistance and then we get back under the yearly opening range, we could then potentially look for that yearly opening range to act as resistance moving on. And if the yearly opening range does in fact act as resistance moving on, then we will look to be able to get into some trades looking for Nvidia to go lower. So there you go. Hopefully you guys got everything you need. You can let me know down in the comment section if I missed anything, or if you want to see anything in my next video, and I will try my best to get that in for you guys. Thank you so much for your time. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.